Hey yo, what's good? Welcome to my first ever YouTube video. And yo, I ain't gonna waste no time on this channel. I'm gonna show you guys how to get entries like this and entries like this. So let's go on to the chart. If you mess with the content, yo, click that like, subscribe button. Let's go. Okay, there are a few things you need to cover to get entries like that. First one being market structure, the second one being wave theory, the third one being supply and demand. If you combine all these three concepts together, you're gonna get sniper entries. There's a lot that goes into it, like your top-down analysis, fair value gaps, and all of that. But to cut it short and to make it simple for you guys, let me show you guys what I mean. First one being market structure. You can Google this, you can go online, you can look it up. Market structure, Dow theory, and all of that. If price is in an uptrend, we want to see price giving us what? We want to see price giving us higher highs, which is your higher highs and higher lows. If price is going in a downtrend, we want to see price giving us lower lows and lower highs. If price is consolidating, we don't enter the market. What we look for with how we get sniper entries, we only look for one pattern, either on the upside or the downside. This pattern, the change in order flow pattern. This is what I call a change in order flow pattern. Reason why is because price was going down, the order flow was going down, and then price broke my high. Now the order flow is going up. This is a buy signal and this is a sell signal. This is a sell signal. Price was going up and we changed order flow by breaking this low. Now price has to go in a downtrend. This is what we call a reversal. Some people call it a head and shoulder, but I look at what price is doing. I don't look at the structure and everything. I look at what price is doing, because price leaves a footprint. So yeah, market structure. The second one being wave theory. Let me delete this. Wave theory, price moves in three phases. Price moves in three phases. We have your first phase, your second phase, then your third phase. When we in an uptrend, when we down, first phase, second phase, third phase. Push, exhaustion, push, push, exhaustion, push. I don't know what you guys call it. Up, down, whatever. 1, 2, 3, 1, 2, 3. If we're in an uptrend, we go like this. If we're in a downtrend, we go like this. If price is still showing interest in going up, it's gonna continue with the wave theory again. 1, 2, 3. That's the second one. Third concept being the supply and demand. And yo guys, if you want me to make a video on a separate video on each of these concepts, just comment down below and I'll do that. Third one being a supply and demand. If price is coming from, let me do this quickly. Let me do this. Demand. With how I plot my supply and demand levels, it's gonna make sense when I'm on the chart. With how I price, I place my supply and demand, not support and resistance. With how I plot my supply and demand, for the supply I use the large bullish candlestick, the last bullish candlestick before the drop, and for the demand I use the last red candlestick before the rise. Let me show you what I mean. If I'm going to be looking for a supply, let's say I'm looking for a supply at this area, I'm going to use the last bullish candlestick, which is going to be this one. It's either I cover the body or it's either I cover the wicks, both the wicks. Either way, this area is a supply or a demand area. I'm going to show you it's going to make sense once I combine each and everything together. So if I'm looking for a demand level, I'm going to cover the last bearish candlestick, which is this one, before the rise. Here's another one. There's a supply, the last bullish. Here's a demand, the last bearish. So these are supply and demand zones. yeah, supply and demand zones are all over the chart. The only thing you need to study is where to place them and where do you get them, which ones are valid, which ones do not work out on the chart. So yeah, let's go on to the chart. Let me show you a few trades I entered using this concept. Trades that are in play. GBP CHF, I'm on this trade I just entered now, GBP CHF, and we're in profit. EURUSD is also in profit. NZD CHF, just entered the trade, also in profit. GBP AUD, also in profits. All my trades are in profit. I took a loss on what was it GBP NZD, I think. Yeah, took a loss on GBP NZD, but it's 0.25%. It's not a lot compared to the wins. Still waiting for this to play out. I missed a trade on this, both sides. I missed the buy, even though I did analyze it. I did wait for it. I missed the buy and I missed the sell. So I'm just going to be waiting for a proper setup to enter. So yeah, let me just choose any of, I also missed this one. Let me just choose any of these charts and break it down for you guys. Let me go with GBP CHF. Let me open a different chart. That would make sense. Okay, like I said, you need to combine each and everything together. Firstly, you'd want to know where you are in the market, going down from top until your entry time frame. I start off on the monthly, going down up until my 15 or my H1 time frame to enter. I use my monthly, weekly, daily for buyers, for hourly for buyers, H1 for entry, M30 for entry, M15 for entry. It all depends on where you are in the market. Either you're on the either you're on wave 1, wave 2, or wave 3. Let me start off on the monthly again. Look for that structure. Yeah, this one is making sense. We're in a downtrend, as you can see. Price pulled back to what? To a supply. Yeah, this one makes sense. Last bullish candlestick before the drop. This is our monthly supply, and this was our low. We're expecting price to give us this wave. Expecting price to give us this wave. Since we know that on the monthly time frame we did tap our monthly, we did tap our supply, we're gonna drop down to the weekly. I'm telling you guys, this is gonna make sense if you sit on the charts day in and day out. And as you can see, on the monthly time frame, we did have a break of structure on this wave. Remember, wave 1, wave 2, we have to make a wave 3. Each and every wave has waves, internal waves inside of it. Let's go on to the daily. I'm going to show you what I mean. This second wave has waves. As you can see, we have waves going up and down. We're going to use market structure. As you can see, this was our high, our low, market structure happening here. We expect price to come back and supply from this area. Reason why is because you have to study this pattern. When price gives us a change in order flow, we have to come and grab liquidity. Liquidity meaning we have to go and tap our supply and demand areas. This would be for a buy and this would be for a sell. Once you study this, your price becomes easy for you. Once you study this, price becomes easy for you. For a sell, for a buy. So since we now know that on a daily time frame, price changed order flow here, we have to go to the upside and go and tap that supply. And the reason why I'm not using this last bullish candlestick as my supply is because of this gap here. If you want me to do a video on fair value gaps, on why price has to fill gaps, just comment down below. And if you go onto the weekly time frame, you'd see that there is no supply zone here. but on the daily time frame we do have a supply. Let me just use that because I know some of y'all would be mad on why I don't use that. Go on to the 4-hourly time frame. Each and every wave has internal waves. As you can see, we need this move, and as you can see on the H4, on this wave, we had a break of structure here. After the break of structure, price needs to come back down and demand from the zone here. Last bearish candlestick before the rise. And why am I saying this is a break of structure? As you can see from this wave coming down, price left a footprint showing us that I'm no longer going down, I'm changing direction. So since now we know that price has to come onto the supply, onto this demand, now we're going to look for what? We're going to look for sells. And as you can see, let me zoom in. The reason why I got in on that sell there was because price on this wave here, we know that we have to go up and down on this wave here, where the price change structure. Though theory applied here, and as you can see, though theory applied. Change this to H4 again. We came in here, wave 1, wave 2, wave 3, break of structure, wave 1, wave 2, wave 3, supply being there. So yeah guys, that's how you get your sniper entries. And as you can see, you enter sell, stop loss being above, take profit being where the price is going. Look at the risk to reward. And if you go down to the 1 hour, you can still get a bigger risk to reward. For example, this would have been a loss because structure changed here. You enter, stop loss being above, targeting that H4 demand zone, and price took you out. You just wait for another one until it sticks. Once price starts moving, your risk to reward is going to be big. For example, 1 is to 10, 1 is to 20. But yeah, that's how it is. So yeah guys, comment down below on what you guys want from me to work on next.